your audience can really increase their revenue up to 50% of the revenue through the partner channel, which is probably the most misunderstood area.
Welcome back, everybody, to the Revenue Problem Solvers podcast, where we look to crack the code on growing your business by tackling challenges that keep revenue leaders up tonight. I'm Carl Ortmanzon. Today's episode, buckle up, because we're going to dive into a topic that is so commonly misunderstood. That is the topic of partner programs. Now, today's podcast is sponsored by the great team at Virtual Causeway. Traditional demand gen has broken for a lot of teams that we talk to on the Revenue Problem Solvers podcast. And Virtual Causeway is helping to fix that by shifting from demand generation to demand positioning. Instead of chasing form fills, they engineer where and how your brand appears when buyers research through AI tools and even peer networks. The result, fewer cold motions, more high-intent conversations, and revenue teams actually spending time with people who would like to evaluate. Check them out at virtualcauseway.com. Oh, and don't forget to mention the show for a special rate. My guest today is a longtime B2B software executive, Robert Jurkowski, or as we'll call him, Bob today, Bob Jurkowski. Bob has spent his career building and scaling revenue engines inside of some of the most interesting enterprise software companies in Silicon Valley. He's held senior leadership roles at companies like Oracle, ADP, and i2 Technologies, where he helped to grow revenue from just a few million to over 100 million in revenue in only a few years. But one of the chapters he's best known for is his time as CEO of Intacct, a cloud financial software company. During his tenure, the company scaled its direct sales organizations. He built a massive partner ecosystem of hundreds of firms and grew to thousands of customers before ultimately being acquired by Sage for around $850 million. Since then, Bob has taken everything he's learned from building those companies and now works with founders and executives on something he's deeply passionate about: engineering predictable, capital-efficient revenue growth. Instead of relying on hero sales reps or hoping the next quarter works out, Bob focuses on building systems, demand generation engines, partner ecosystems, and sales processes that make growth repeatable. Bob, welcome to the podcast, and thank you for joining us.
Thank you, Carl. It's great to be here today.
So to kick us off, can you give us a little context about your world? What industries or verticals do you work with? What are your selling motions? What size companies do you work with?
Yeah, that's a great question. So I have been working, I've helped build 11 B2B companies at different stages as an operator, both as a chief revenue officer, as a COO, and then as a CEO. Many of those companies were technology companies, B2B companies, professional services companies that I actually helped build. So as somebody who basically lives in the skin of that executive, I really learned along the way that the companies I built, one of them, for instance, RightWorks, we took from $0 to $100 million in 2 years in sales. Companies like Intacct, of course, were different because we built the company, scaled the company, doubled the revenue every year. And one of the things that we're going to talk about today is how your audience can really increase their revenue up to 50% of the revenue through the partner channel, which is probably the most misunderstood area. But in many cases, today I'm working with typically 7 to 10 companies, B2B companies. They vary in size. I've worked with some startup companies. I work with mid-stage companies that are looking to scale in the 10, 50, $100 million range. I've worked with large public companies where, like SAP, for instance, where they actually asked me to come in and look at the partner channel, why it wasn't working, and figure out how to get it working. So you look at different companies at different sizes. All companies have this challenge with the partner side of the house. It's probably the most misunderstood and utilized area in terms of revenue expansion and ecosystem adoption that companies are not applying today. That's why I'm excited to be with you today.
Yeah, it's a great topic because it's one that I know in my experience, anyways, we'll dive into my experiences is being part of it from actually I was early on with BlackBerry. Verizon was the carrier that I supported as an example. And so I was involved in that, and also with some other channel partnerships, but then leading the channel partnerships and the challenges. So I'm excited to talk about this one today. So anyways, here's how we got to today's topic, is because, like everybody, I asked Bob, hey, what's a successful revenue initiative you've ever led, or an existing challenge you're solving? And he said, Carl, it's both a challenge and a success. It's using partner programs as a growth lever. So let's maybe start here if we can. Most companies want to establish a partner strategy or a partner program, and they struggle to make it work. Now, you've already talked a little bit about it, but you've scaled an impressive partner program at Intacct. So maybe the question we can start with: how come so many programs fail?
That's a good question. Here's what I see. A lot of programs today are, I'll call them opportunistic. In other words, you'll have a partner transaction or a partner deal happen maybe once a year or twice a year. So they're architected wrong from the start. When you architect a program which is opportunistic, you're only going to get an occasional opportunity every now and then. The other thing is, it's very easy for people to select the wrong partners. We're going to talk a little bit later about a partner scorecard and the importance of a partner scorecard. And we're going to talk about how to create one for yourself. But the key is, most partner programs are full of partners that are not going to deliver any revenue for you. And another reason why partner programs fail is they have a partner team or a partner manager, and they go through what I call the motions. They go through the motions of signing up partners, onboarding partners, enabling partners, and not getting the revenue out the back end. So a lot of times, the reason why these partner programs either fail or underperform, which by the way is universal in terms of me looking at hundreds of different partner programs, is because they're architected wrong from the beginning. And number two is, they're not focused on achieving the throughput, which is revenue and sales velocity that they need with the partners. So that's really a key. And the third thing is, you got to select the right ones. So we'll talk about the selection process. And for many companies that are talking today, they can use the partner scorecard to look at the partners that they currently have and decide, are these the right partners? But then, this is the important part. Look at the ecosystem of people that are in every market you're selling into and say, who are the partners I should be working with in that ecosystem? When I was at Intacct, we decided to go into a number of verticals or industries very intentionally. But for instance, when I went into the property management space, there was already what I call a market maker. The market maker is a company called RealPage. They're in Dallas, Texas. So RealPage was the 800-pound gorilla in terms of providing solutions for commercial and property management companies. And so they really had a suite. What they were missing, though, was what I do. What they were missing was financial applications. They had three choices if they wanted to provide that solution to their property management customers. One is go buy a company. Two is build it, which would take forever. Or three is go ahead and partner. And so I convinced them to partner with us. We put together strategic relationships. That relationship alone, as they embedded our solution as part of their solution, turned into about $2 million of net revenue licenses that we've received every year. So that's an example of a market maker. A market maker is somebody that offers mission critical services or solutions in each of these different markets. And those are your primary allies you'd like to figure out how do you work with as you go into each market.
Okay, which I mean, there's lots of things right there that he just talked about, and if you have a partner program, Bob was talking about the scorecard and some of these things. But if we can sort of jump back to the beginning, because I think there's one of the things that we talked a little bit about is like the challenge. And so because partner programs are such a challenge, where did you start? Or maybe the question is, how do you advise some of these companies to start building their programs? What are the things that they should be looking at to decide good fit, not a good fit?
Well, there's two things. The first thing is, what's your partner program strategy? It sounds like something we all have, but in many cases we don't. So, for instance, are you building a partner program because you're trying to avoid cost? In other words, are you trying to offload organic sales cost of building your own organization with a third-party sales organization? That's what a lot of companies do. Another one is expanded coverage. Are you trying to reach different markets or segments of your market or geographies, let's say internationally, that you can't reach today through your own sales organization? So that's really an interesting thing. A third objective is market penetration. When you think about this, um, for instance, one of the companies I was at, I built a company called Orange Software. We got acquired by Bond. We were covering a lot of B2B companies that we wanted to sell into. So it made sense at the lower end of the market to work with the channel, and the higher end of the market to work strategic. So in that case, we needed to make the channel work. And it was about market penetration at the lower end of the SMB marketplace through the channel. A fourth area that's important is strategic partnerships. Are you trying to build strategic partnerships? So for instance, another company that I helped lead is a company called Silicon Energy. And what we did there is we put together strategic partnerships with Accenture, CGEY, major systems integrators to go after different industries around the world, such as mining, such as financial services, and so forth. These are industries we probably wouldn't have gotten to on our own. And then finally, this is the most interesting part about putting together well-constructed partner programs. They could lead to acquisition. So one of the things that you were sharing was my background. And one of the things I've been very cognitive as I've built these different companies is to create and orchestrate 10 different mergers and acquisitions worth about $2 million in value. So building the partner programs, getting leverage in the market was something I think about naturally, in terms of it's just a natural part of your go-to-market motions as you build a company. However, the end effect may be that you find these partnerships, you make them work, you execute them. There's codependency here, and it may lead to that partner thinking, wow, I can't get along without Carl's company because Carl's doing such a fantastic job in terms of partnering with me. And so I've had that happen many times. So those are different objectives that you should think about when you build a partner program.
Okay, and so there's a number of things you just said there. There's either you're trying to reduce cost, you're either trying to break into a new market, or you're either trying to, if I heard it correctly, you're either trying to penetrate you're trying to further penetrate a market that you would like to, or you're creating a strategic partnership, or you're trying to put yourself prepare for an acquisition. All of these are different aspects and different components of where you are in a company. And so when you are looking at this, so if we go back to like, if I'm, let's say, an SMB and I'm starting to scale, am I looking for, like, do you advise companies for strategic partnerships? Do you advise them, hey, just look for, you want to reduce costs? Like, what's the very first one that they should think about?
Yeah, I think the first one that they should think about is expanded coverage or market penetration. Because what you're really looking at, if you're a small company, let's say an SMB, let's say you have 5 salespeople, as an example, or less. Some companies I work with, it's the CEO. That's a salesperson. So if you're in that situation, you're looking for leverage, right? You want to get as many opportunities as possible. You can't do that though under your own power. You've got to get leverage. And what's interesting, and this is kind of an interesting way to look at this, is I'll give you an example. One of the clients I worked with is a company called Gather Digital. Great husband and wife team focused on event management solutions that would be on your mobile phone. And what was interesting about them is they wanted to see an exit in 3 to 5 years. They wanted to focus on which companies they should partner with. They had a strong, small direct sales team. So what we did is we said, let's build a partner scorecard. and let's figure out how to choose the right partners for you, because it's always going to change for every company.
Mm-hmm.
Second thing we did is we said, let's look at all the people that are in the event management space that are either providing solutions or services into that space. And we came up with about 150 companies. We then scored all those 150 companies in that space. And so what we did, we said, for the people that scored low, those are people that probably would want to acquire you because they don't have a mobile event management solution as part of their solution set. For the people that scored high, which could be, let's say, conference organizers or solution providers that had really the right assets to go to market with them, those would be a sales distribution channel. So what we did is we figured out, let's go after the ones that scored high because those are going to help us expand into the marketplace. What was interesting though is the first company with the lowest score that I showed them is the company that ended up acquiring the company. And the reason is because that company needed what Gather Digital had created. So it can serve both purposes. But at the end of the day, a great way to think about this is you're in a market. Let's say that market is financial services. Let's say that market is healthcare. Let's say that market is something else, the SMB. And you're saying, okay, I'm in the market. Now I need to look at who else in the market should I be thinking about in terms of leverage and partnerships, like we just talked about. And then how would I look at them through this lens of a scorecard to figure out whether they're the right partner or not? And then how do I then matriculate this thought into execution to begin discussing a partnership with that company? And so this is really a great place to start. And partnerships, as you know, they take time to grow, but as you invest in them and as you have success, it's amazing how they flourish. And that's a key.
Which is a great question, which is a great lead into the thing that I'm thinking of, and I wrote down here is like, what are the components of a great partner program that I should be thinking of?
So some of the things that I think are really important of a great partner program is you've got to think about a couple of things. One is executive sponsorship. So if you're going to put together a partnership with another company, you've got to make sure that you've got executive sponsorship from their end as well as from yours to really see this partnership through the lens on what's it going to do strategically for both companies. If you just join a company, let's say, I'll give you an example. One of the partner companies I worked with in the early days is Salesforce. So we created at Intacct the front office, back office integrated solution. And we were one of the founders of their app exchange. So in the early days, we were very important, very strategic to Salesforce. We were one of the founding companies on the app exchange and so forth. But after they added, 3,000 companies on the app exchange, you could say that we were just one of 3,000 companies, right?
Yeah.
So without the sponsorship of Mark Benioff and some of his management team, we would just be another plugin on Salesforce, right? So executive sponsorship is really important. The second thing I think is really important to your question is architect the right relationship. So when I talk about that, there's models for partnerships. There's referrals, there's resellers, there's embedded, there are services partners, and there's affiliates. Now, those are just 5 different categories, but you have to look at what you're trying to accomplish in terms of the partnership. So referrals are nice, they're opportunistic, they're easy to do. Resellers are better because that organization now is taking your service or solution to market, and they're selling that. The cat's meow, as I call it, is the embedded one. That's something I practiced at Intacct. That's where companies would private label our solution and take it to market as part of their solution. The reason why that was so helpful was because we were embedded in every sale. The reason why also that was so helpful is because they didn't have to explain the relationship between Intacct and their company. It was already their solution, so they took it to market. One of the companies that we worked with, by the way, in my past where I did this is a company called CGEY. right? Big company. They took, not at Intacct, but at Silicon Energy, they took our solution as a enterprise energy management solution or platform to market as their own. You can imagine once it had the CGEY stamp of approval, it became adopted everywhere because everybody trusted CGEY as their strategic partner. So that's another key. Another thing that happens when you sign up a partnership, we talked about things that make partnerships successful, is prime to pump.
And is prime to pump.
Yeah, prime to pump. Prime to pump. So let's say you and I decided we were going to partner together. And let's say, Carl, you are the CEO of a company and you've got a sales force of 10 people. Even though we've signed this agreement, even though we've onboarded you, even though we've helped you get up to speed, so what? We don't have opportunity sitting in front of us, right?
Right.
Prime to pump means we need to create a mutual program of demand generation where we want to put, let's say, 100 leads in front of your sales organization that you can work on. There's nothing that's going to get the sales organization more excited about how to work together than the prime to pump. Give them opportunities to work on. I would embed my organization in your organization to make sure that the DNA is transferred and they can close the first, let's say, 3 to 5 deals. So a lot of, you hear this term failure to launch. A lot of partnerships never get launched beyond the paperwork. And the reason why they never get launched is because you didn't prime the pump. You have this chasm between you and the partner thinking about, well, you're going to bring a lot of business to me. And the partner's thinking, well, how are you going to help me get business in the door? And so that's really one of the key. The other thing, 2 other things that are important in terms of, I call it secrets to success, is what I call the DNA transfer. If I have really a successful organization and we've been successful selling direct to whatever market that we're selling into, and now I sign up a partnership, what I want to do is do the DNA transfer to that partner so they fully understand how I've been successful so they can emulate that, right? A lot of times partners may not have the same structure, sales process, maybe the same discipline that you do in terms of success. So part of our joint goal should be to help them with the DNA transfer. What do they need to sell the solution? How do you give them the hunting guide? I call it the hunting guide, which is how do they hunt for opportunities? How do you get their people up to speed in terms of being able to present that solution or service, make sure that they're competent? What are the steps in the sales process that they should be thinking about going through? How do you assist them when they're challenged? So that's part of the DNA transfer. And then I guess the other thing I would say is start right and scale up. So we didn't
start right and scale up.
That's right. In other words, we didn't get to 300 sell-through partners at Intacct overnight. We started out when I first became CEO there. We started out working with CPA accounting firms, and they were our initial partners to Reseller, our solution. And it was only through this process of me thinking through market makers, thinking through mapping ecosystems, where I started really to think about unleashing the full potential of a partner model in each of these different markets that we went into. So when you think about this, think from a sales perspective. If you decide you want to go into, let's say, sell into healthcare, that's a market you want to sell into. You're going to build this great team, sales organization, the right discipline, the right sales playbook, the right go-to-market motions. In parallel to that, if you look at healthcare, there's a lot of people already selling into healthcare and successful working with your target audience. You want to also have a playbook with them in terms of how you're going to go partner with those organizations and get leverage into the healthcare market. So you want to do both. From a go-to-market motion perspective, you want to sell direct. You also want to sell indirect through partners, and you want to scale both of them to be successful.
Okay. So there's a bunch of things you just said that I'd like to try to ask you a little bit more about, and I'll come back to it is, sorry, I'll come back to maybe a little bit of my experience. So I've been able to be on as a seller inside of a big program, right? Like I worked at BlackBerry, we were working with Verizon, we had the hardware, they had the services, and it was a good collaboration. Then I've been part of ones where we had a product, and I think and we had global distribution, and we had partners like CDW, etc. So companies like that, and they would sell the product on our behalf, and then all of a sudden you would see it close. But then I've also been part of where, and so I was leading, I had the opportunity to lead some of that strategy and work with them. But then I've also been part of like establishing partnerships from the ground up. So one of the challenges that I've gone through personally is when you're creating, like you said, the prime to pump, which is a good example. When you start to create the relationship, I've used the analogy of use a partner program as a bank, not an ATM. I don't know if that's a good example or not, right? A bank is I put money in, I take money out, right? So like it's a give to get. But there are some companies that I've seen that use a partner program like an ATM. Hey, I'm just going to take money out. So there are some inherent challenges, in my opinion, of getting set up. There's things like, what's our cost going to be? So if it's a relationship where for sake of round numbers, I sell my stuff for $10,000, but I give it to the partner, and the partner can sell it for anywhere between $8,000 and $10,000 based on the relationship, and I have to get minimum of $8,000. And then you start to look at your cost acquisition. So there's an example of like one thing. The other side of it is like, hey, I really want to be a partner because I want to sell your stuff on your behalf. Now give me a bunch of accounts or leads to go do it, or you're just going to send me leads and I'm going to close them for you. So there's different structures of that. If you're advising companies early on of like just starting their first program, do you advise them on prime the pump and just give them accounts to run and lead and close on your behalf? Do you do it more of a, hey, you should be looking at it from a perspective of your acquisition cost, or is it dependent on where they are in the stage that they're at?
Yeah, it's good questions. So if you're thinking about starting a program today, when I talk about priming the pump, usually I'm talking about doing some joint demand generation with the partner. So in other words, create a great example is a webinar. Let's do a joint webinar. Let's talk about something that's really important to this audience. Let's each contribute to what the webinar is. And what we're going to do is you're going to have leads after this webinar to go run with. So it's a great way to do something around helping them, because if you think about a new partner, you're bringing something new, some new solution or service to them. They may not fully understand it, but you can be in that webinar the thought leader to actually help the audience understand the solution. They can be the company that is going to be the execution arm to actually help the companies realize the value of that thought leadership. And it's a great way to work with them. So that would be one. Going to conferences and co-op and working together, or speaking at conferences or in-person events would be another one, or doing some micro events with executives would be a great way to do that. There are a lot of ways that you can prime the pump, if you will, with the partner. But one of the most important things I found is you just got to create a joint partner plan on how to get them off the ground. A lot of people have contracts, they have built sales tools, they have a partner portal for registration, and those are all good things that you need, but those are not going to make the program successful. What's going to make the program successful is some of the things we talked about. Is those are some of the keys, but making sure that you're creating with them, priming the pump with a lot of demand, because all of us learn experientially, right? If you are working on opportunities, you get to learn how you're going to sell, position, and close and service a client with that partner solution. Until that happens, it's not experiential. It's all in theory. So the best thing we can do is convert and execute and make sure that that theory is translated into real practice.
So can I I've never done this before, but can I take a bit of a contrarian view and ask you a couple of things? Because I'm again going back into experience and some of the things that I've heard from other senior leaders. So the first one is this. Great. Bob, I hear you. I'm just kind of I'm also kind of role playing as I'm asking a question. Hey, great, Bob, I hear you. We're gonna do a program, whatever. We're gonna set up your group. Awesome. How do I know that you're actually going to be focused on selling my stuff? That is something that comes up and I've heard from others. So how would you like say, how would you respond to that of like, how do I know what your focus is going to be so that I know that you're actually going to do the work of the partner program as that bank relationship, as we sort of using that analogy?
Well, that's interesting. Part of that I talked about, there's two things here that are important. One is, again, executive sponsorship, right? You have to have somebody who says, we're going to make this program work, right?
Okay.
So that's called commitment, right? The problem with two of these partner models, the referral and reseller model, is you could get dropped in the sales process, right? So that's a situation where the sales team may be taking your solution as a reseller to market, and then they decide because there's budget constraints, they drop your solution. The embedded model, which a lot of companies can't start with, but they can always move toward, prevents that. When you're embedded in somebody's footprint, whether it be a service or a solution, that means you're getting sold in every transaction that they close. That's where you want to be. This is what we did at Intacct. You would think, wow, this is a financial application. This is like giving a heart transplant to the CFO, right? How do we do that? And people would say, it's amazing how sometimes people, they don't believe. And yeah, we took that and we took that solution to market as a financial application. And most people would graduate off of QuickBooks or they graduate off some entry-level system, and they really needed a full financial application that they could scale with going forward. And so we basically made it easy for people to get started with us, easy to onboard, easy to get trained, easy to be successful. And when you start doing that, and you start doing that not only with your clients, but with your partners, it's that flywheel that gets the relationship going. So I think that a lot of people are going to be skeptical about a partner program because they haven't had success.
Yeah,
I can tell you there is a formula for success.
Okay. The second one that I'd like to ask you a little bit about is again, I'm asking you some of the questions that, knowing that you've done all this, things that I probably would have liked to have asked myself in other examples. So the other one that I've heard is, who takes ownership? So there's two different, right? So sake of discussion, you're my partner and you go and you sell something. So you go and sell it to Steve's company. And so Steve buys from Bob, but it's Carl's software. Steve now has an issue. Is it Bob that handles the issue or does Carl handle the issue? And how does that come together? Because the context of this, and try to give you, I should have probably led with the context, is having that relationship of who's the ownership of the final account. Is it Carl because it's his software? Is it Bob because of the relationship? And then how does that acquisition cost actually blend to whether or not it was a good outcome or not a good outcome? I don't know if I don't know if I've structured that question in a way that's helpful, but the underlying question is, who's responsible for the end relationship in the case that something happens, and does that affect the end CAC or not?
Yeah. So let me share with you in practice how this works.
Okay.
If you are a referral partner with me, Carl, and I have, let's say, the solution, the software, I'm going to be responsible at the end of the day for the customer success, because you're just referring them to me. Let's say you're a reseller and you want to resell my solution into the marketplace. Obviously, you own the relationship with the customer, right? And the next step is, do you want to implement or not the solution? Some resellers do, some resellers don't. The next step question is, for that customer, who's going to provide support? In the reseller situation, I would suggest that I provide the support for what I call first line and second line support for the customer, because at the end of the day, they are using the platform, they're using the solution, they want to have support from the source. Okay. Now, let's move to the next one, the private label or embedded model. That's where you're taking my solution set and you're taking it to market as your own. Again, you obviously own the relationship. You own all the sales and marketing around that solution. And you probably also own the, what I call first level customer support, which means when there's an issue that arises, your organization is going to provide the support. You're not going to provide second line support, which is if there's a problem with the platform or something not working, or there's a technology glitch. Since you didn't build the application, you're not going to provide that. You're going to defer that to us, right? So in each of these models, you can see where the ownership of what you own as a partner changes. And so as you move up that, the interesting thing about COGS, when you think about how you really are going to help in terms of improve your cost of goods sold and your cost of sales, is you want to leverage your partner organization as much as possible so that those costs are not here. Where people get themselves in trouble, I think, is when they sign somebody up to be a reseller and they're a referral partner, and you end up doing all the work anyway, right? Or they want to be a embedded partner where they want to embed and sell you, but they don't want to take on the responsibility for sales and marketing to take that hat. So you can't be a rev share partner and give up, let's say, 40 or 50% of your transaction to a partner if they don't take on that sales and marketing and first line support. That's really important. So the reason why a lot of times these numbers don't work is because one of the most important things when you architect these relationships is it has to be very clear, what does the partner do to get that revenue, and what do you do? If you sign up a bunch of partners and they just turn out to be referral partners, but they think they're resellers or embedded partners, then all you're doing basically is increasing your cost of sales.
Right. Okay, so that brings, I mean, there's a really good nugget there that I just took out of it is you talked about different aspects, referral, reseller, embedded. And so in that, going back to that relationship, say, hey, actually, Carl, remember, we set up this as a referral partnership, not as a reseller. Or, hey, Carl, we set you up as a reseller, not a referral. So this is where you need to do. And so maybe that's where the language and creating that structure, and maybe that's the question. Do you bring that and say, look, I've got these partnerships. You pick the one that you want, and that's the one we're going to go with.
It is. You have to walk in with a model. You have to walk in with a model that says, if you're a reseller, these are the things you're going to do. These are the things I'm going to do, right? You have to spell it out. The problem a lot of times when people architect these relationships, they don't do a good job talking about that. They just say, well, Carl's going to be a reseller and I'm going to provide everything Carl needs, right? Mm-hmm. And it's going to be fantastic. What I didn't do there is I didn't spell out what Carl has to do to earn 25% of the transaction or 30%. The key there is to be very explicit to say, Carl, you've got to own this. You've got to own your own demand generation. You've got to own your own sales. If you don't, then I'm giving up 30 basis points for nothing, right? I really am. This is one of the biggest keys that we have in terms of making sure that the partnerships are authentic. The other thing that we did, and this is really interesting at Intacct, is we didn't start everybody off to be an embedded partner. We started them off to be either a referral partner or a reseller first. And we said, let's learn to walk before we run. Let's go ahead and work together, you as a Carl, as a reseller, and let's get maybe five opportunities closed together. And as you get more comfortable with this technology and the solution set, why don't we look at how do we expand that relationship to where you could take this into every opportunity that you have as an embedded partnership. So a lot of times it's great to crawl, walk, run when you're talking about partnerships. So even though, let's say, you may come to me and say, hey, I want to take your solution embedded, go to market. We'll say, well, for the first 5 months, why don't we start off as a reseller? Let's make that work, Carl, and then let's graduate to that. It's also a great way to set proper expectations.
Mm-hmm. Yeah. And I think that is the best thing right there that we just talked about, is like that setting of expectations, because it can become conflated. And I've heard, like, like you said, my experience is not nearly what your experience is, but the experience of like, well, wait a second, we set this up and you were going to give me a bunch of accounts, and why don't you just do this? So the conversation shifted, and I like what you said, is establish that and be explicit with your expectations. It's really, and then the crawl, walk, run phase. I like, Bob, I realize we're at 40 minutes already and we got to get you out of here. I said we get you out of here within the hour. So maybe let's I like to say this: everybody likes new, nobody likes different. And when you do both at the same time, it can either cause friction or uncertainty. So for somebody thinking about up-leveling and thinking about building a partner program, what are 2 or 3 actionable items that you would tell them on Monday morning, go do these 2 or 3 things, and that will put you in a great path for success with a partner program?
Number one is, if you're thinking about your partner program, let's think about strategically, what do you want to do with the program? What's your goals, right? Number two is, let's build a partner scorecard. How do you even know what a good partner looks like? If you don't know what good or great looks like, how do you even get started, right? Because it's like anything we'll do at that point. And by the way, I'm happy to do this for free with anybody that's listening to your podcast today, to actually help them just create a partner scorecard. And I have a formula for that. I've done that for many cases. But what goes into the 10 components that goes into the partner scorecard are different for every company. And then the third thing I would look at is realistically just thinking about scale. What are we trying to do in let's say the first 12 months in terms of the partner program? So I'm big in playbooks, right? We talk about go-to-market strategies. We talk about go-to-market motions. One of the keys I look at is a playbook, and just creating a simple playbook that says, in the first year, here's what we want to execute and accomplish with our partner program, and here's how we do it. I love strategy. Strategy doesn't pay the bills. What does pay the bills is execution and results. So those are the 3 things I would say we start with today. Monday morning, partner program. What do we want to accomplish? Number 2 is build your partner scorecard. And number 3 is, let's think about a plan over the next 12 months that can be implemented based upon the size and scope of your company. If you're just a startup company, but you're looking for leverage, then it's got to be size appropriate. If you're a big company like SAP and you have a partner program that's not working for you, then we're going to do something different. In that case, I interviewed their top 40 partners to figure out why it wasn't working. And I quickly came to the way we were going to reinvent their program.
Amazing. There's a huge value add if you didn't hear what Bob just dropped, a little nugget right there of like, if you need help with a partner scorecard, he just said he'll help you do that. So, Bob, this has been a lot of fun and I've a lot of learns. Where could people find you if they said, hey, you know what, I'd just like to learn a little bit more from Bob? Where would they find you?
A couple ways. You can visit my website, which is revenuegrowthstrategy.com. And go ahead and go there. We have an area of blogs. We have a blog specifically on this topic. So Carl and I covered just a fraction of what's in that blog, but you're welcome to read that if you're looking for more granularity in terms of building your partner program, getting it started, scaling it, so it's positive and accretive to your revenue growth. That's a good place to start. Another thing I'd offer up is go ahead and reach out to me on LinkedIn. There's my LinkedIn address. So go ahead and do that and just reach out to me and say, hey, Bob, can we get together? Let's talk about my strategy. Let's talk about my scorecard. Let's talk about maybe giving me some advice. We're here to actually help you get this on the right track. We're here to help you. If you haven't launched one, let's get it launched. If you have launched one, we can discuss ways that you can interrogate your current program to make it even better, make it more successful. So those are great ways to do that. If all else fails, you can call my cell. Right?
Yeah. This, and I mean, if you haven't heard from this, like, I haven't got to know Bob for very long, and we got introduced through somebody, through Natasha, but I will say that, like, when he offers these things up, he is genuine. Like, he's done an incredible job of following up with me. And Bob, it's not often that I get a chance to talk to somebody who's taken multiple companies public, or they've had multiple acquisitions, or they've done these things. So this has been really, really great to get to know you a little bit over the last little while, and I appreciate everything that you've shared with us today. And also, it's all of your lessons learned. So thank you for doing all of this with me today, and also for all the communications and building of the relationship so far.
And Carl, thank you. And thank you for creating this podcast, Revenue Problem Solvers. I mean, what an excellent forum to bring insights, best practices, and knowledge to your audience. So thank you for doing that.
It's been a lot of fun. I didn't think that I would enjoy doing a podcast nearly as much as I have. Now, I will say it is a ton of work, and it may be something that I tell other people in the future, but it's a lot of work. But I've learned so much, and I get to ask questions that hopefully people are like, oh, this is really interesting. Now, and to all of you that have been continued listeners, I appreciate you. And also hopefully we're answering the questions. But that's going to wrap up another episode of the Revenue Problem Solvers podcast. I definitely want to thank you, Bob, for sharing these invaluable insights today. You heard there's strategies you can put into action. Remember, success leaves clues, and every revenue problem has a solution. Sometimes you just need the right conversation to find it. Until next time, it's Carl with the Revenue Problem Solvers, helping you turn your obstacles into opportunities. Thank you for investing your time with us today. We'll see you on the next episode.